Good morning, everyone. Thanks for joining us today. I'm Sean Whittington, the life insurance specialist over at Art Jetter and Company. Welcome to the fourth and final presentation on the top term sales ideas we've seen this year with our wonderful presenter, Morgan Holbein, joining us from Assurity Life out of Lincoln, Nebraska. We'll dive right in here, but as always, if you have any questions, please type those into the chat box on the right-hand side of your screen. We'll make sure they all get answered at the end of the presentation. And afterwards, feel free to give us a call to get a copy of today's webinar and to answer any other questions you might have. So thanks for joining us, and I'll hand it off to Morgan.
All right, great. Thanks, Sean. Good morning, everyone, and welcome to our, like Sean mentioned, fourth and final Assurity Term Sales Strategy webinar series. So I've really enjoyed being able to talk term with you guys. It's one of our greatest products that we do offer. And it's looking great right now, especially with the rates. So I've enjoyed talking to you about term in 4 different markets. And today we're going to hit one that is very popular. It's one that contains a large amount of opportunities. It is the baby boomers. So let's get started here. Like Sean said, my name is Morgan Holbein. I'm the Regional Sales Coordinator and work with Jetter. I work out of the home office. We're in Lincoln, Nebraska. So a little bit about our agenda today. We're going to go over the term life highlights, which if you've been on for the last 3, you know that we typically go over these at the beginning just as a refresher. Then we're going to dive right into the sales idea, which again, like I said, we're talking about baby boomers today. So who are they? Why do we sell to this generation, especially when it comes to term? And then I'll present a sales idea as well. And then we'll go over those riders at the end. So product highlights real quick. Our term periods are listed up there. Again, that depends on their age as to what's available. The issue ages for our term product, 18 to 75, so it fits perfectly in with the baby boomers. As the oldest, I believe, I'd have to look, I think is 72. And face amounts, we go all the way from 25,000 up to 10 million. So we've got a wide array of face amounts available. So that should fit just about every client you have. And up to 500,000 and up to 350,000 for the older ages is when the accelerated underwriting kicks in. So that means they could be eligible for an instant decision sent straight to issue without any medical exams at the end of that e-application if they are underneath those limits. So keep that in mind. The underwriting classes are listed there, and it's also annually renewable after the initial term to age 95. It is also convertible, and it's convertible to any of our permanent life products. So you could choose any of our whole life products or universal life as well. So diving right in, baby boomers. As you already know, they were born in 1946 to 1964. So the youngest is now 54 years old. And this is the post-World War II era. There are nearly 80 million baby boomers right now in the United States. 10,000 are reaching retirement age or age 65 every single day. So that is a huge opportunity. That is a large amount of people. And 59% are parents who are still financially supporting their children ages 18 to 39. So that's an interesting stat as well. And the reason behind that is because of record high student loan debt and then a difficult job market for recent grads. So another reason why life insurance in general is important for this age is because baby boomers are responsible for not only their mortgage or any expenses that would incur shall they leave their spouse behind, but also they're still financially supporting their children. So they've got a lot to leave behind here. So we're going to talk the opportunity here. Business owners. And this is not something that I knew before kind of diving in and doing a little bit more research with the baby boomer generation. baby boomers are twice as likely as millennials to start a business. You think in this day and age, the millennials, they're all about the startup. And that is true with the startup market, but surprisingly, baby boomers are twice as likely to start a business. 45% of them consider themselves entrepreneurs. So we like to, especially with this term product, talk about key person opportunities. So what would happen to a business in the case of the key person or the owner passing away? What would happen to that business? What would happen to their family? So we see a lot of key person situations with this product. Income, 70% of all disposable income belongs to baby boomers. That is a huge percentage, and they will inherit $15 trillion in the next 20 years. So that is a lot of money. That's a lot of money to purchase life insurance. That's a lot of money that needs insured. So just a lot of opportunity here. And then retirement prep as well. So 45% report having no retirement savings whatsoever. So that's kind of a scary number. And although we don't provide cash value with the term, it is a more affordable product. The rates are lower than permanent life insurance. It's going to cut that in about half. So they're still able to save for retirement while protecting their mortgage, their family, their business, everything in case they would pass away. People also use it as supplemental life insurance. They might already have a permanent plan in place. They might have had one in place for quite a while, and they just need to supplement that to maybe make sure that they cover their mortgage, or to leave something behind for their children, or to support a business that they just opened. Another interesting stat regarding income, the AARP group for baby boomers, they are only targeted by 5 to 10% of all marketing efforts. So when I talk about the opportunity being huge, I'm not just talking the fact that there's 80 million baby boomers in the United States and 10,000 are turning 65 every day. I'm talking about the fact that they're just not very well marketed. So the opportunity here is huge. I mean, everyone thinks about millennials because of the startups and because there is such a large number of them, but the baby boomers is a huge group that is just not touched as often as you would think. All right, so how to sell it. The big selling points here, especially with term over like a permanent life insurance plan, would be the chance to avoid medical exams. So back on the product highlight page, we did talk about the accelerated underwriting piece of the term product. If you stay under that $350,000 range, $500,000 for the more middle-aged, younger ages in that baby boomer generation, you will accelerate that underwriting, and you will have a chance to receive an instant decision at the end of that e-application, and possibly an instant issue without any sort of medical exams. And no one likes to have a medical exam. So if there is a chance to avoid those, because everyone's busy and no one wants to go through a medical exam, then this is a product for them. And then obviously, like I talked about on that highlight page too, it is a convertible product. So even if they want to just get a smaller term life insurance plan, they can always convert it to a permanent product at a later time. The affordability of it. So like I talked about, this is a pre-retirement age. So people are saving pretty heavily for retirement because it is in sight. They are reaching that retirement age quite rapidly. They're within maybe 10 to 20 years of it. So they're wanting to make sure they save as much as possible. They're getting kind of nervous here. So they want to be able to protect their mortgage, protect their family, any children that they're supporting, their spouse as well if they were to leave them behind. So they want to make sure that they have that coverage, but also still be able to save for retirement at the same time. So affordability is huge because obviously those term policies are a bit cheaper, sometimes half the cost of a permanent life insurance plan. Also, we talked about mortgage coverage in another sales strategy webinar. This goes along with the baby boomers as well. So they might still have a balance on their mortgage, so they want to make sure that this is covered for their spouse in case they were to pass away. They have a fixed income, especially once they hit that retirement age, so they want to make sure that the mortgage is covered, it's still affordable because they are working with a fixed income and don't have a ton to spare, especially if something were to happen. So we have the sales idea here. So we're going to talk about a baby boomer couple here, and they are on the older end. But Jeff, 70, and his wife Mary are retired. They moved to their dream home on a golf course 5 years ago, so they have 10 years left on their mortgage still. They live comfortably and enjoy giving financial help to their 2 adult children and their families. So kind of the situation that we've touched on already. They have a balance left on their mortgage. They do support their children. So really the questions to ask would be, who would be affected if something were to happen to you? What expenses do you still have left? So how much of a balance do you have on your mortgage? How much do your children rely on you? How much do your family rely on you? And then also you want to find something that fits in their budget. So you want to find out where they are financially. How much are they saving each month? How much do they have to put aside once savings, mortgage, and all of those living expenses are taken care of? How much do they have left to ensure that everything is taken care of in the event of one of them passing? And the opportunity here is a $500,000 10-year term life policy. So we talked with Jeff and Mary. They have a $275,000 mortgage balance, and they want to have $225,000 to help their children out if something were to happen. They are still supporting some part of their adult children's financial needs and their family, so they want to be able to still help in the event of one of them passing. So the rate for this at a standard non-tobacco, which is about typical for a 70-year-old male, is $618 a month. And again, they're going to receive $500 or $500,000, excuse me, and that'll cover their mortgage and their children if something were to happen to Jeff. So again, this is just for Jeff. So that's an example of someone on the older end of the baby boomer spectrum. But another thing I do want to talk about, because we have ended all of our webinars talking about our riders, and I do want to mention that some of these will apply to the baby boomer generation and some of them won't, just because of age cutoffs, but it is something that's really important, especially once they're reaching that retirement age or that age where people get sick more often or become disabled more often. So our 3 living benefit riders that we do provide, along with, and I don't know that I mentioned this in our other webinars, but I especially want to mention it here because long-term care is definitely a glaring issue for these baby boomers. We do have an accelerated benefits rider that is included on our term policy. So they can accelerate that benefit up to $250,000 if they were to become terminally ill or confined to a nursing home full time. So keep that in mind. That's built into the policy. It doesn't cost any extra, but that accelerated benefits rider, which works similarly to a long-term care rider, is built in. Some living benefit riders, though, that they can add on the return of premium benefit. It isn't as popular with the baby boomers because it can be a little bit pricey compared to when we added it to those millennials, but it can provide up to 100% of their premiums that they pay in, so it could pay off big time. And that schedule is always included with that illustration if you want to run it. So with the ROP, or the endowment benefit rider as we call it now, it provides a return of premium up to 100% of those premiums due to lapse, cancellation, or the end of the term period. So it's available only on the 20 and 30, so it would have to be with that younger age group. And the ROP, if they are doing a 20-year term, they can add the ROP up to age 60 The 30-year would be up to age 50, so we're kind of out of that baby boomer range. The critical illness rider, now this is a big one that I wanted to talk about because, like I said, the youngest age for this baby boomer generation is age 54. So they're still pretty young there, still kind of considered middle age, but they are getting to the age where people get sick more often. Their possibility for diagnosis of a critical illness does go up. So this is an awesome rider to add, and you can add it up to age 65. So that covers about, hits right in the middle of that baby boomer generation. So about half of them can still add it to their term policy. And it's nice to package those all in one plan because it does save a policy fee, and it keeps it all on one policy. So with that CI rider, again, to age 65, it does terminate at age 75, but it does cover 3 different categories. So we have the heart attack and stroke category, other, which includes major organ transplants, and paralysis and such, and then a cancer category as well. And again, you can select $20,000 to $100,000 for the benefit amount. We pay a lump sum upon first ever diagnosis of one of the covered illnesses, but we use a 3-category approach just like in our standalone product, where we're going to pay out that benefit 3 times, up to 3 times before the rider will close out. And please keep in mind too that it does not take anything away from the death benefit that they selected for the term policy. So this is a separate pool of money, as is the disability income rider that we're going to be talking about next. So again, if they select like a $50,000 benefit amount, let's say, they're technically receiving a $150,000 benefit here because we will pay out up to 3 different times, once in each category before it closes out. The next one's a monthly disability income rider. Now this one might not be available to as many baby boomers as you'd like, but it is nice if they are wanting some sort of disability coverage, but they're not wanting to go through all the hoops and add all the bells and whistles along with a standalone disability product. It keeps it pretty simple by having one occupation class and a standard 90-day elimination period, 2-year benefit period, up to $3,000 a month for that benefit amount. And the issue age is up to age 60. So we're only going to be able to cover about 5 or 6 years for that baby boomer generation. Termination age is 65. But again, it does give them some sort of disability coverage if they need it at all to finish up those working years. And again, it's nice to just package it all in one policy, and it is a separate pool of money from both the critical illness rider and the term policy as well, that death benefit. So that wraps up our term for baby boomer generation. I'm going to leave this up here. This is who you can contact if you do have any questions. I believe, Sean, you have the chat box open as well. Do you know if we have any questions as of now?
Nope, I'm not seeing any. So please, if anyone has any questions, go ahead and put them in that chat box on the right-hand side of your screen there. If you've got a question, then chances are someone else probably has the same one, so don't be shy about it. We've got the expert on the phone. And then while we're waiting for those, if anybody does have any, I wanted to thank Morgan for presenting over the last few weeks. I know I enjoyed every single one. They were all great. And I wanted to thank everyone that was on these presentations. I see quite a few people made it to all 4, but if you missed any or you'd like to see them again, everyone should be getting a link to the recordings, but you can always give us a call. Our number and our email address is up on the screen there. We can get you any kind of quotes or sales materials you might need and answer those questions. Well, with that, I'm still not seeing anything. So, Morgan, unless you have some more closing comments, we can go ahead and wrap it up.
I don't think so. Yeah, feel free to contact the Life team over at Jetter, and thank you so much for having me. I've enjoyed talking with you guys, and I've always loved talking terms. So, again, thank you for letting me speak with you guys.
Awesome. Thanks, Morgan. Thanks again, everyone. Have a great rest of your day, and happy holidays. Thank you.
Thank you.